Imagine putting just $27 into a single stock today and letting time, patience, and smart positioning do the heavy lifting. That amount sounds small, almost insignificant, but history has proven again and again that massive outcomes don't start with massive money. They start with timing, conviction, and understanding where the world is going next. Today I want to walk you through why a simple $27 move into one specific stock could realistically change everything for long-term investors who understand the game. Let's be clear from the start, this is not about getting rich overnight, and it's not about gambling on hype. This is about recognizing an early-stage financial ecosystem shift that most people still underestimate. The stock we're talking about sits right at the intersection of digital finance, younger consumers, and a broken traditional banking system that is slowly losing relevance. This company is building the future quietly while Wall Street is still arguing about the past. The average person thinks investing requires thousands of dollars, complex charts, or insider knowledge. That mindset keeps most people out of the market entirely. But platforms today allow fractional investing, meaning $27 can buy you exposure to real companies with real growth potential. What matters is not the amount you start with, but how early you position yourself before the crowd arrives. The company at the center of this opportunity is Sophie Technologies, a digital-first financial services platform that is slowly turning into a one-stop shop for modern money management. Sophie began as a student loan refinancing company, but that's no longer the story. Today, it operates more like a tech company wearing a banking license, and that distinction matters more than most investors realize. Traditional banks are weighed down by physical branches, outdated systems, and aging customer bases. Sophie doesn't have those problems. It was built for mobile, built for speed, and built for a generation that expects everything to be instant. Checking accounts, investing, credit cards, personal loans, student loans, insurance, and even crypto exposure, all inside one ecosystem. The goal is simple: keep users inside the platform for life. Here's where the $27 idea becomes powerful. You're not buying a mature company that has already peaked. You're buying a business still scaling its user base, still improving margins, and still moving toward sustained profitability. That's the phase where long-term investors historically see the biggest returns, not when a company is already perfect, but when it's obviously improving. Sophie's member growth has been one of its strongest signals. Every quarter, millions of new users are joining the platform, and more importantly, existing users are adopting multiple products. That's critical. A customer with one product is replaceable. A customer with 3 or 4 products is sticky, loyal, and far more profitable over time. This is exactly how big financial empires are built. Another overlooked advantage is Sophie's banking charter. This allows the company to hold deposits, reduce funding costs, and operate more efficiently than fintech competitors who rely on partner banks. Lower costs mean better margins. Better margins mean stronger earnings. Stronger earnings eventually change how Wall Street values the company. Right now, many investors still treat Sophie like a risky fintech experiment. But the data increasingly shows a company transitioning into a real financial institution with technology DNA. When perception lags reality, opportunity exists. Markets don't reward what already happened, they reward what's about to happen. Now let's talk psychology, because this is where most people fail. $27 feels disposable, so people don't respect it. They chase memes, flip trades, and sell the moment volatility hits. But if you treat that $27 like a seed instead of pocket change, your behavior changes. You stop reacting emotionally and start thinking in years, not days. Think about this scenario. You invest $27 today and consistently add small amounts whenever you can. The company continues growing users, expanding products, and improving profitability. Over 5 to 10 years, valuation multiples expand as confidence increases. That small initial position doesn't stay small. It compounds alongside the business itself. This is exactly how long-term wealth is built for ordinary people. Not through massive one-time bets, but through patience combined with asymmetric opportunities. The downside on $27 is limited. The upside, if the company becomes a dominant digital finance platform, is not. Risk still exists, and ignoring risk is dangerous. Regulatory changes, economic downturns, competition from big banks or tech giants, all of these factors matter. But risk must be weighed against reward. Sophie doesn't need to become the biggest bank in America to justify a much higher valuation than today. It only needs to continue executing steadily. Another reason this story matters right now is macroeconomic timing. As interest rates eventually stabilize or decline, loan demand tends to recover. That directly benefits a company like Sophie, which thrives on lending products. At the same time, younger consumers are increasingly rejecting traditional banks. That generational shift is slow, but once it reaches critical mass, it becomes irreversible. This is not about predicting exact prices or dates. It's about understanding direction. Money is going digital. Banking is going mobile. Consumers want simplicity. Companies that deliver that win over time. Sophie is positioned directly in that current. $27 won't change your life tomorrow. But it can change how you think about investing forever. It can be the moment you stop waiting for the perfect time and start participating. The biggest mistake new investors make is believing they need certainty before acting. In reality, certainty only comes after the opportunity is gone. If you're watching this and thinking $27 is too small to matter, remember this: every massive portfolio you've ever admired started with a first position. What separates successful investors from everyone else is not income level, it's consistency and vision. This is not financial advice. It's an example of how small, intentional decisions can create long-term leverage. The market doesn't care how much money you have. It rewards discipline, patience, and understanding trends before they become headlines. So ask yourself this: will you spend your next $27 on something that disappears in a day, or will you plant it into a business that could still be growing 10 years from now? That single choice, repeated over time, is how everything changes.